probability and result of the opportunity you've given away. You've gained the probability because somebody else thinks there is now value that you can see. And that's the difference, isn't it? By trading in this way, you're sacrificing some profitability for probability, and that's always going to be a compromise. You're always going to compromise. Like a statistical arbitrage has 100% probability, but you make very, very little money out of it. The closer you get to 100% probability, the less money you're obviously going to make because you're not assuming as much risk. So you can't expect to get rewarded for the same kind of risk that you're taking. So I think that's pretty fair. I think that's a pretty fair trade-off that people can choose between. Well, that's right, Rick, because if retail trade most of the time is about consistent winners. It's not about home runs. It's great when you hit a home run, but home runs are few and far between. Home runs are few and far between. So it's better to be consistent, and then if you're consistent, guess what happens? You trade more often into the good setups. And because you trade more often into the good setups, guess what happens? You hit more home runs. You're involved when it does break, but you're no longer relying on it breaking to make money. Your trading profile is made up of lots of sequences, lots of small winning sequences. And this is how I trade. I mean, I'll take a lot of scratches, and the guys will remember I was talking about a very, very large S&P trader years ago who scratched about 70% of their trades, and they only made money on 30%. And the reason why they scratched 70% of the trades is because they were just trading often, taking small 1-tick, 2-tick profits, getting stops at break even, and happy to build into that. And then on the odd occasions, they maybe made a nice profit on a swing, they took profits, and then on the very odd occasion, because they were trading so often and so regularly without losing money, they caught pretty much every single major swing that took place in the S&P. And that was maybe on the odd 5%, one in every 20 trades, they catch a winner that's going to make them, say, $1,000 per contract. But if you're trading several hundred contracts, that's a lot of money on those occasions. But that's how a lot of people deal.